Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your weekly technical analysis of LME 3-month nickel and zinc. I'll start with LME 3-month nickel. I'm sorry if this is once again a bit of a long commentary, but there is still a whole lot to discuss here. Okay, so the basic drivers are still here at work. They have been operational now for many months. The key patterns driving the market higher are the middle time, currently 17,415, and the upper time, currently 2910, of the huge shallowly bullish 2017-2018 bullish shift pitchfork. The upper time had been significant back in September, capping the market, and again in October, though it was assisted that time when it was breached. The next pattern is the October 2020 to March 2021 bullish shift pitchfork, notably the lower time, currently at 18,200, and the middle time, currently at 2510. These tines have shown the more recent bullish angle of attack, especially the lower tine, as support when working with the slowly rising long moving average, currently 18,255. I'd like to quote once again something I originally said now some 15 weeks ago, and I quote, "Whilst these two pitchforks are in operation, this market will still have the bullish incentive, even if it sometimes looks like it is missing." End of quote. These are the core drivers in this market. Now we come to more recent action. Looking at the peak and low seen in September, a number of key features pop out. To start with, the peak and low of September that resulted in a monthly key reversal up for the month have also helped draw a newer bullish shift pitchfork for the April to September move. This pitchfork has already seen action with the middle time, currently at 19,765, on the way up in early October, then again as a higher dynamic resistance, maybe even acting as an attractor over last week and this week. Then there's the upper time, currently at 21,385, working along with the old upper time of that originally mentioned 2017-2018 bullish shift pitchfork, capped the move up. As I said 3 weeks ago, it is all getting very interesting now. This is because of a key piece of action. You see, while September was a large monthly key reversal down, October was an even bigger immediate countering monthly key reversal up. Just let that sink in for a moment. Next, I'd like to discuss the latest addition to the mix. I revealed this last week as it has only become really visible to me over the last 3 weeks. It is to look at the whole action from late June to date as a huge diamond pattern. I admit it's a bit lopsided on to the top right of the pattern in my daily chart, but I hope you can see what I can see. Now, diamond patterns can be tops, bottoms, or continuation patterns. This one can only be a top or a bullish continuation pattern. So the diamond has a lower uptrend trend line, currently at 18,390, and an upper downtrend trend line, currently 21,145. For the moment, I'll continue paying close attention to these two key trend lines, as well as the previously mentioned pitchfork tines. For your guidance, this diamond reaches an apex at about the end of January next year. These are the current forces at play here in what is in reality a very confined space, despite ostensibly and superficially wide ranges. Plus, all this has happened and is happening in a relatively short period of time. LME 3-month zinc. Prices have now been travelling down the far side of the mountain for about 3 weeks. They had started to slow descent, but only over the last few days, when prices finally dropped down to support from the old May 2020 to date optimised uptrend, currently at 32.67, and the rising short medium moving average, currently 31.92. This optimised uptrend had shown the bullish angle of attack for many months until it stopped working in early October, as the market shot up then. Further below, though not by that far, we have the rising medium moving average, currently at 30.90, which at the rate is moving higher may impact the market by the end of November. This now prompts a bigger question, one that I outlined last week. It is whether the recent action, specifically the mid-August today action, is a bump and run reversal top. Now I've drawn a bump and run reversal trend line, top trend line, currently at 30.24, just in case. And the reason I mentioned the medium moving average is that after that, well, the next support will be this bump and run reversal top trend line. Admittedly, it is in the midst of the congestion support from May to September between 28.53 to 30.92, but it will soon be free of those, and we'll then really see how strong this moving average is, and also the short medium moving average. I suspect for the moment they both will seem reasonable, though I will have doubts if tested over too long a time. Thank you for listening to this weekly broadcast. Gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.